Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. Today's video is going to talk about CRM. So this is a developing trade, actually one just recently initiated, but it's playing out pretty quick. So we wanted to take this opportunity to kind of go over uh, targets and also potential upcoming catalysts for this one. So first off, last week I did a video talking about our game plan into the market pullback. So when averages were under some pressure, we did a video kind of giving some insight into what we were screening for, why we were looking at certain names, basically, uh, long story short, we wanted to find stocks that had strong earnings. So we wanted recent good news or upcoming news. So that's strong stocks that had strong earnings, are in strong trends, and have pulled back to moving average support. Long story short, if you're interested in more information, definitely check out that video. It was last week, and it basically it kind of highlighted a few different sectors. So we wanted to buy best in breed on dips. So, best in breed, among names in like the market at the moment, or software certainly. MedTech there's been some pockets of really fantastic action in MedTech, cyber security, and retail. There's been some really great retail names too. So, a handful of the recent trades have kind of fallen into those sectors. So definitely recommend checking out that video from last week. CRM, one that fits the bill perfectly. Uh, it is, if not the top software stock, definitely one of them. Large market cap. Stock has just been absolutely incredible. I mean, really fantastic yearly uptrend. Uh, just great earnings, great action. The street loves it. The numbers support the move. So it's been this really steady, really methodical, higher highs, higher lows. Just keeps kind of grinding away. Really fantastic support for moving averages, which is kind of what attracted us to the trade in the first place. It had so kind of like go in a little bit further here. So it had really solid earnings a couple weeks ago, but the stock didn't act great. You could see it pulled back a little bit. I mean, it went into earnings at a 52-week high, pulled back a little bit. It was more of a non-event than anything else. But then, in the aftermath, it actually ended up rolling over a little bit more sharply when the market started to pull back. Uh, so it came on our radar basically when it broke below the 20-day and it was nearing the 50-day. And the reason is, as you can see, like, going back, a handful of times this year, it's gotten down to this 50-day here, 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 obviously just in the beginning of August as well. I mean, you can see, and each time it's gotten to into this moving average, it's basically rallied to put in a new high. Uh, if not within a couple weeks, then within maybe like 4 to 5 weeks. So really quick snapback here. Didn't put in a new high, but then on the second attempt to put in a new high, like a couple weeks after, right here, put in a new high. So you can see that. I mean, like the pattern is really well defined. This was top name, good earnings, pulling back to really strong support. So obviously it was one of these opportunities that we just felt didn't want to pass up. So because it tended to rebound quick, I mean, you can like what we showed. I mean, you could see, like, usually when it bounces, it just kind of builds quickly. So we figured like a shorter dated trade would be worth it. Like we didn't need to necessarily pay for all the extra time. So the October 155 165 call spread we felt was an interesting bet, and from the time of the initiation, that gave about give or take 7 weeks for the trade to develop. And as the stock has shown a few times this year, I mean that if it's gonna rebound and put in a new high, that would should probably be plenty of time for that trade to develop. So in terms of targets, basically there's a gap to where it closed on the day it reported, which is more or less 155. So that was the first target, and basically after 3 or 4 days here, it's gotten right to that 155 area and hit it. So normally we would be looking to cut back risk and roll up, but because the stock it's really acting great, tech hasn't been as strong the last few days. I mean, there's been some names that have acted better than others. CRM definitely falls in that category, but tech overall has been a little bit shaky. But you can see CRM is really showing some relative strength, which we love, and the action overall has been pretty steady, kind of like a steady climb back to the high. So we want to see if there's a little bit more momentum here, and it can kind of push maybe like a point or two past 155 before rolling. But if it ends up kind of stalling here, then we'll revisit the rolling and try to cut some risk. So 155 was kind of the preliminary target. We'll give a little leeway, maybe say 156, 157 now, and then the second target's going to be 160. And the reason for 160 is, as you can see from the last time it rebounded off the 50-day, it basically rallied. And when it broke through the previous high, which was just about like 149 to 150, it extended about 5 points up to 155. So we're looking for kind of a similar move, about 5 point extension through the previous high. So about 5 points above 155, which would put it in the 160 ballpark. So that'll be our secondary target. I mean, earnings are past, but there actually are a couple catalysts coming up that could influence CRM. So two big cap software peers report in the next 2 weeks, Adobe and then Oracle. Oracle, probably more of a competitor to Salesforce, just in the sense that they kind of, they are competing for similar business versus Adobe, which is a little bit different. But to be honest, even though Oracle and CRM are a little bit more competitive, it seems that Adobe might actually have a little bit more of an impact, just because how correlated Adobe and Salesforce have been. So I mean, if you take like a snapshot picture of CRM here, and pull up Adobe, and you can see, I mean, the stocks are very, very, very similar in terms of how they've behaved, how this year has played out. I mean, they're both at 52-week highs, both snapped back pretty quick. Adobe hit 52-week highs, Salesforce hit a 52-week high. So Adobe this week could impact Salesforce. I mean, it's a top name as well. It's over a billion market, over 100 billion market cap, excuse me. And the pricing about 11 points for Adobe this week. And really, I feel like unless they have like a major slip up and get smashed, kind of like what Red Hat did. So if you remember what Red Hat did in June, kind of it missed and dragged down a bunch of the software stocks. If Adobe is solid, and even if Adobe pulls back a little bit, I still feel like that bodes well for Salesforce and like the sector. So, basically, I'm just looking for like I think inline to like strong numbers for Adobe could keep like the software run going and Salesforce's move still going. If Adobe gets creamed, it's going to be a negative catalyst for Salesforce in the sector. But Adobe's really had an impressive streak, so I think that's a little bit less likely. But Adobe and Oracle, definitely two things to kind of have to keep an eye out on, because it could impact Salesforce. But other than that, I mean, the trade's setting up. The trade's setting up really nice. It's been a quick move here, so it gives some optionality now. So we'll kind of be patient, see how it develops. But Salesforce is definitely one of like those setups that we're looking for into the weakness. So if we can find more of them, definitely write them up and get those going. So if you guys have any questions, comments, as always, I'd love to hear from you. Please reach out. Yeah, have a fantastic night and talk to you soon.